All right, hello everybody. Thanks for tuning in. Should be a pretty interesting week in the market here. We were talking about this a few days ago, at the beginning of last week, how the financials looked really weak. I mean, did we know that there was going to be this whole big, crisis with Silicon Valley Bank? I don't know, but we did notice the financial sector of the market was getting really weak. So a lot of times people ask me, like, Mark, did people know? Why is it that the chart always kind of gives like early signals, like why did the market sell off before this news hit the tape? And the answer is I don't know. I mean, I don't know. I don't think there's anyone out there who was big enough to manipulate the markets like a lot of retail investors think. But this is why it's kind of important just to forget about the news, even when you have a big event like this going on, and just pay attention to the charts. Let the market tell you what to do. Don't let the analysts on CNBC tell you what to do because they're wrong basically all the time, or Fox Business News or whatever chat room you're in. Anyway, let's take a look at the S&P here, and then we're going to look at the financials. So here's what makes me think that there's a good chance we're going to go lower. This 390 level is really important. And as you know, if you're a member of stockmarketjobber.com, and if you're not, I suggest you subscribe to our YouTube channel right now. If you're not, well, I would suggest that you start paying attention. It's knowing the markets or knowing how to trade is all about knowing what levels are important. Now, this 390 level has been an important level for like a year. It was support here, and it became resistance here. How would a level that was support become resistance? Well, it's because of buyer's remorse. There are people who bought here who regret doing so when the market goes lower, and they decide to sell and get out of their position and break even if they can. So once the price gets back up to where they bought, they want to sell. So if you have enough remorseful buyers placing sell orders at the level that they bought at, well, the level that was support can become resistance. Now here we have the opposite. We have levels that are resistance becoming support. And notice again, this is 390 level. Why would a level that's resistance convert into support? Well, this is seller's remorse. People who sold here were happy when the market went down, but once it went higher, they tell themselves, I made a mistake. I'm going to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. So if you have enough of these remorseful sellers placing their buy orders at the level that was resistance, you get support. So buyer's remorse can turn a level from support into resistance. Seller's remorse can turn a level from resistance into support. And we can see here it goes on. Support, resistance, support. For some reason, and I don't know why, and remember, I was an institutional trader for more than 2 decades. So I can speak with authority. I mean, I'm not like, a genius or, super trader, this, that, or the other thing. But I think if, you should subscribe to stockmarketjobber.com or check out our YouTube page, and you're definitely going to learn. I mean, at the very least, I'm confident, right? Now, listen, we just broke this level. There's a good chance we go lower. Next stop is probably around 377. If we do go lower, there's a chance we might bounce, and we'll get into that. But levels that were support in the past can become support again. This is what we call market memory. And I don't know if there were buyers who wanted to buy here around 377 that were patient and they're going to wait, maybe going to buy here again. But regardless, that's what I would be looking at. Now, a lot of this is going to have to do with tomorrow morning, or tomorrow, through noon, I guess. Janet Yellen Pat's girl. Janet Yellen came out and said they're not going to step in. Some people are saying they should step in. I've been saying for a while this whole crypto thing is going to spread, and this is what we're seeing. All right? These things happen every 10, 20, 30 years. Unfortunately, and I'm old enough to remember it. And I remember that, or one of the things I've learned is that when they start telling you not to worry, that's the time to worry. Okay? All right. So anyway, let me just review here. So we've broken an important level. When markets break important levels, they tend to make big moves. So this week should be really interesting. I mean, I don't know what's going to happen. I'm not a psychic, but make sure you check in tomorrow. Now, here is what it all comes down to. This is the financial sector. And if you're a member of stockmarketjobber.com, which I hope you are, at least you should be by now, um, we started talking about a week ago how the financials looked really weak. Now, I don't know, do people know, the market knows? I don't know. I've been dealing with this stuff for 20, 25 years. I still can't figure it out. That's why I think it's just best to just listen to the charts and not try to figure out the news. I mean, a chart is a symbol of, or a graphical illustration of human psychology. And if you don't understand that, you're never going to be able to read charts. And human psychology is not rational, right? People are emotional. But if we learn how to read these charts, and you will if you subscribe to my site, you can kind of understand it. Like, why would a level that was support become resistance? Well, like we talked about, buyer's remorse. People buy here, they want to sell here, so they get out of break even. Why would a level that was resistance become support? So support becomes resistance, resistance becomes support. Now, we've gotten right down to this level again, and we're really oversold. Oversold means that something is below what would be its normal or typical trading range. Oversold means you're below the normal or typical trading range. Overbought means you're above the normal or typical trading range. Now, this is important because markets tend to revert back to the norm. And there's a lot of strategies on Wall Street that are based on this notion of reversion to the mean. Now, that being said, doesn't mean it's time to buy. We have to wait to see if this reversion actually happens. It could keep going lower. I mean, this is pretty weird. We could be going into a big debacle here. And like I've been saying for a long time, my target on the SPY is around 320. Now, you would say, why is your target on the SPY around 320? It's close to 390. Well, there's a few reasons. One is if you go through the history of Wall Street, since the Great Depression, there's been 25 bear markets. Bear market is when the market is off 20% or more. The average bear market is 35%. Okay? If you take the 35% off of where the top was, around 411, well, take 35% off. Guess where you get to? Around 320. From some of my colleagues, I've talked to them, and they're more into the fundamentals. Well, if you go to historical valuations of like price to earnings ratio, guess what? If the market was at its historical valuation, guess where it would be? Around 320. So this is what we're seeing is not unprecedented. It's just how the market works. Things go into bubbles like crypto did, they deflate, they get blown up, and you know what? In another 5 or 10 years, it'll be the next thing. I don't know what the next thing is. I mean, I'm not that smart. I'm not Kreskin or anything like that. But eventually there's going to be another bubble. So what we need to do as traders is figure out how we can figure out how to make money off of this. So let's just take a look at this here. And I'm going to try to erase all my pen. But as you can see, we're at a level that was support. It was resistance. It was support. It was resistance. Now it's support again. Now, I think that we're going to ultimately go lower. But I also think that there could be a chance here for a tradable bounce. If you're not into it, don't do it because trading counter trend is very tough. And when I say trading counter trend, it's like buying when the market's going lower, selling when the market's going higher. But I just want to make you guys aware of this, or you aware of this. So please make sure you check out stockmarketjobber.com. All right, let's go to the next chart here. Now, this is also kind of important because healthcare is like kind of like the unwanted stepchild, right? It doesn't get the respect it deserves because people kind of just take it for granted. But healthcare is the second biggest sector in the market after technology, and we just broke important support. See, resistance here became support here. Again, it's that seller's remorse. People sold here, they go to buyback. Um, If there's enough remorseful sellers placing buy orders, the level converts into support. Now we've broken the support. And a lot of times when we break support, we make big moves lower. And why is that the case? Well, It's because if we break support, meaning the price trades below it, and remember, we need to look at charts in the prism of what does it tell us about supply and demand. If a support level breaks, meaning the price trades below it, what does it tell us? It tells us that the investors who created this support with their buy orders have left the market. Anytime you take demand out of a market, regardless of what market it is, it could be, it could be the stock market, it could be, grapes, it could be shoes, it could be any market. Well, anytime you take demand out of the market, the sellers or the supply could push it lower because they're going to have to offer stuff out at a discount to get buyers off of the sidelines. So anyway, there's a good chance this keeps going lower here. So, we need to watch that financials. If it starts to break and if this keeps going lower, there's a chance we can move into like a pretty meaningful sell-off. Now, one of the things we teach at stockmarketjobber.com is how to make money when the market is going lower. Because frankly, I think that it's easier to make money in a down market because markets go down faster than they go up. Because markets go down because of fear. People sell because of fear. People buy because of hope. And fear is a much stronger emotion. So here I have the direction. I don't even know how to say this. But regardless, this is an ETF, FAS, that trades 3 times in the opposite direction of financials. Now, this is not a trade recommendation. I just want to have you put it on your radar screen. If the financials keep going lower, and if you think they're going to go lower, this would be a good place to put your money if you're not an options trader. This thing has been up 30% in 5 days because it trades 3 times inversely to the financial sector, and financials have been melting down. So if XLF breaks that support, it's probably going to be a good time to jump in on this if you're not an options trader. All right, so anyway, make sure you check back, everyone, because you know what? This is going to be a pretty serious market. This could be like, things are starting to unwind. This could be like the biggest thing since, I don't know if it's since Enron, but this week is going to be really interesting in the market. So anyway, once again, please sign up for our YouTube page. Check out the website, stockmarket.com. I hope I'm wrong. I hope the markets go back up. But I just don't think so. All right. Well, anyway, hopefully you can prove me wrong. Thanks, everybody.